Hey, welcome everybody to Investing Education Academy's podcast and live. If you're joining us via the podcast, thank you for being a listener. We have now made it to that place where you can tell Alexa to play Investing Education podcast, and that's kind of cool. For everybody who's watching us live, we really appreciate the support. Going into the fourth quarter, we realize we have topped over 20,000 views. So that is because of you all, and that's a pretty awesome stat to say. Today, we're going to talk about stocks, of course. We're going to talk about the Santa Claus rally. Now, some of you all might be thinking, Santa Claus? Why are you all talking about Santa Claus? So I'm going to let Leon tell you a little bit more about the Santa Claus rally while I do some housekeeping.
Yeah, so just real quick, sorry for the as we came on, we were both laughing once again. We're still getting our intro outros together. But having said that, yeah, so Santa Claus rally. So for people that don't know, so we're going into the fourth quarter, as Brent said. We're in December, we're in the month of Christmas. Of course, it's totally different because of COVID. But there is a dynamic in the market, in the stock market, that's known as the Santa Claus rally. And some people say it's real, some people say it's fake, some people say it's just, it's made up, it doesn't really happen. So we're going to kind of go a little deeper today and see, is it real, and does it more, I guess not more, is it real, is it tradable? Like, is there a way to take advantage of this quote unquote Santa Claus rally? We'll go a little deeper into what that is in a minute, but just on the surface, again, the Santa Claus rally is what it sounds like. As we get closer to Christmas, the market, some people think, it rises for essentially no reason, and people say it's because the euphoria of people. People love Christmas, or because this is the quarter when a lot of companies turn into the black. They actually turn their profits for the year. There are a whole bunch of speculations on why this phenomena actually happens or doesn't happen. But there's really nobody's proved it to be true or not yet. And so today we're gonna look at some numbers and just see, is the Santa Claus rally, does it exist, and is it real or not?
Yeah, so and for those of you all who thinking this is not going to be a speech about Santa Claus. So we're going to be talking about the money as it relates to the stock market. This is that opportunity to subscribe to the podcast. If you're listening, become a subscriber. We appreciate it. If you all are listening to us in Germany or Belgium, Spain, wherever you might be, France. I know we have a lot of listeners there. Also the Canadian marketplace. Some of you all might be thinking, how is this applicable to me? Because everybody celebrates differently. And it's just at the time of the year in the US marketplace where there's a rally in the market and people try to understand why. We're going to talk about it today. It's a great time to share it if you want to share it with a friend. Also, while we're talking about this, especially today, if you all can just think about what you're going to kind of get for the children in your lives for Christmas. If you're watching this and Leon and I are proponents, think about getting them their first brokerage account, the first stock account. Now I'm seeing a lot of individuals talk about, a new dress, some tennis shoes, these things that a lot of kids are going to outgrow in a matter of like days. And they're going to lose interest in some of these items that we're thinking about buying them in minutes. So while you all are out there, if you could please, for Leon and I's sanity, think about getting the children in your life a brokerage account if it's their first brokerage account. If they already have one, think about actually buying them a stock. So if you have more questions about that, how it works, send us a direct message. You can send it through Facebook. You can join us in the Facebook group, Investing Education Academy. Search it on Facebook. You can find the group, find us. If you want to become a member to find out more about how we suggest you do it inside of our membership platform, you can actually go to www.ieamembers.com. I'm doing this up front today because it's a really important time of year. Leon and I are only going to come to you 4 times for the month of December. So it's imperative we help change some of our traditional our norms for this time of year. Also, we've already had people starting to buy IEA membership as a gift for best friends, for grandkids, for children, for mentorship groups. And, we think that's awesome because the reality is that information is something they can take with them like throughout their lives. If they're a member for a month, if they're a member for ever, we hope they remember forever. But however it plays out, just understanding we can get our kids financially free if we start doing things like Christmas gifts and other things differently, birthday gifts and the such. So for today, as we talk about this, think about what you're really planning on doing for Christmas, and hopefully just that conversation changes your mind. I'm gonna say it again at the end because it's really important that we start working with these kids, our children, at very young ages, so they're not financially poor, when they get older.
Yeah, we want to break that cycle. Just on that point, my sister and her husband just opened up a Robinhood account for my two nephews, or their two sons. So I was very excited about that. I kind of berated them because they had some of the money they were saving up for my nephews. They had their money in a bank account, and if you've been following us, you know how we feel about bank accounts. So
Yeah.
uh,
I gotta share my little story too. All right. So my line brother just sent me a text like this morning, and the account that he opened for his daughter, who just turned 1, is already up 99.9%. She just turned 1 on Monday, and her brokerage account is already up 99.9% in 1 year.
so 100% 1 year, yeah, and at 1 year old, right?
At 1 year old.
Yeah, and same thing with my nephews. I mean, I believe I believe my sister bought their first stock today, which was Amazon, and of course not a whole share. That she did fractional shares, but she now has them in the game at, I believe they're 10 and 7 years old. So that's great. They'll start them young. We're going to teach them as they grow, and they'll learn the market and the ways of investing their money going forward. So Brent, you pull up slide 1 when you get a second. But so that's it. Today we're going to cover the Santa Claus rally, and what is it, and is it real? And there's a lot of debate around this whole phenomena. Some people think that it's kind of made up. Some people think that it's the way to become rich, and some people are kind of in between. So we're gonna kind of touch on touch on. We're gonna go, of course, as we always do. We're gonna bring you some actual facts and some data behind the quote unquote Santa Claus rally to see if it's legit or not, if it's actually tradable or not. And so here on slide 1, okay, so what we have up here is just 3 bullet points for people listening on the podcast, 3 bullet points, and I'm gonna walk through the points now. So first one is, what is the Santa Claus rally? So the Santa Claus rally is a perceived systemic rise in the stock market that seems to occur annually around Christmas. And the reason I say perceived and systemic is because, again, some people look at the Santa Claus rally as being fake, and some people think that it's real. People that think that it's real think that it's going to happen regardless, and it's systemic and it's guaranteed. And as we know in the market, nothing is guaranteed, but people believe in the Santa Claus rally. That's always going to happen. So that's why I use the words perceived and systemic. So again, Santa Claus rally is a perceived systemic rise in the stock market that seems to occur annually around Christmas. Now, so that's what the Santa Claus rally is. Now let's define the timeline around it. So there are 2 typical time frames people typically refer to. First one is from Black Friday, which is the day after Thanksgiving, through the end of the year. And the second one is the last 5 days of the year through the first 2 days of the following year in January. So essentially the last week of the year, and then in the first 2 days of the following year. And that's the one, in my research, I found that most people consider the Santa Claus rally around the time to be that last week of the year and into next year. Whereas a lot of people don't really look at the Black Friday one because they think it's just too long. There's too much time between Thanksgiving and Christmas to really attribute the rise to quote unquote Santa Claus. Whereas the one that the last 5 days of the year, which covers Christmas and New Year, people kind of attribute that more to be, the Santa Claus rally. And so now we know what it is and we know when it happens. We need something to judge against, right? So to see, if the movement around that time is of any value. So as we know, and if you don't know, I'll tell you now, the stock market on average moves 10% per year, right? And trying to compare essentially, because we're going to base the data here on the second point, which is the 5 days that then go into the next 2 days of the following year. So it doesn't make any sense to compare such a short period of time to the whole return of the stock market over a year, which is 10%. So we're just going to use the monthly return of the stock market, which is 0.83%. So just shy of 1% typically per month throughout the year. When you add that up,
real quick, for
12 months, it
anybody
comes up
who's
to about
listening,
10%.
for anybody who's listening and trying to figure out what that is, it's simply the 10% divided by 12.
Exactly.
So if some of you all might be trying to figure out, well, how'd you get to 0.83? It's not a secret. It's just 10% divided by by 12. 10% divided by 12.
Right. So the number we want to pay attention to here is that 0.83%, because that's how much on average the stock market returns per month. So we're gonna see, okay, does the Santa Claus rally, how does it compare to that? Is it better than that? Is it worse than that? Is it on par with that? We'll see. So next slide, Brent.
All right.
Okay. If you could zoom in a little bit.
Yep.
Thanks. So what we're looking at here is a graph from 2008 to 2018. And what it's showing, is the returns of that, remember the Santa Claus rally time frame we're covering is the last 5 days of the year and the first 2 days of the following January. So what this is showing is from 2008, 2018, the return in that time frame over that 10-year period. So in 2008, there was a 7.4% return over that roughly week and a half. 2012, I'm just kind of jumping around. 2012, it was 2%. Going out 2014, it actually was negative. It was negative 3%. 2015, negative 2.3%. And then out in 2018, it was a 4.1% return. So again, these are the returns that the market had over that last 1 week of the year into the following 2 years in January. So the average return for the Santa Claus rally over this 10-year period is 1.3%, right? So we're talking almost double the normal monthly returns of the stock market. So this answers the question: is the Santa Claus rally real? Yes, it is. And on average, you can actually make almost double what you would make. So think about it like this: if you just invested beginning of December, on average, you would get a return of about 0.83%. If you waited to the last week of the year to invest and then ride that out basically through the first week of January, you would get a return on average of 1.3%. So the Santa Claus rally, what it shows is that you get a better return around the quote unquote Santa Claus rally than you would investing in the whole December. So that's pretty powerful information there.
Yeah, and for anybody who's looking at this and thinking, or you're listening to the podcast and you're thinking, okay, he said 2008. Did he say 7.4%? Yes. And then the thought might be, well, wasn't that the credit or the real estate bubble? Yes. And anybody who's been following us knows that one of the things we talk about is the fact that during times of economic uncertainty, luxury goods do very well. And so, you talk about the Santa Claus rally. There's a lot of people who, when times get bad, they buy things to make themselves feel better. It's just how the market works. It's worked like that since 2001. Since I've been in the market, it's one of the first things we learned as agents was, around times of uncertainty, people like to spend money on luxury items. So this is kind of indicative of that, looking at 2008.
That's a good point. I didn't think about that. Yeah, 2008 was a credit crisis. I mean, the world was basically coming to an end in a lot of people's minds. And in 1 week, from the last 5 days of the year through the first 2 days of 2009, the market returned 7.4%. The market returned almost, so it returns on average 10% per year. It returned almost all of that in 1 week in 2008, in the middle of the credit crisis, which is, I didn't even think about that. That's pretty amazing. So yeah, so that shows so what this shows is, yes, the Santa Claus rally is real, and yes, the Santa Claus rally, actually you can make more on average in waiting for that Santa Claus rally to hit than actually just investing for the whole month of December. And again, the time frame we're covering is the last 5 days of the year through the first 2 days of the following year. All right, so we go to slide 2, Brent. So this, and just real quick, this graph here is covering the S&P 500, and I'm making that distinction because the next slide is gonna point something else out. If you could, zoom in on that too, please. So the previous slide covered the S&P 500, right, which is the biggest and the baddest companies in the U.S. economy. This graph here is covering the Russell 2000. Now, the Russell 2000 covers what they call small cap companies, and these are companies that these are where you're going to get like the big growers. You're going to get maybe 100, 200%, if not more, maybe in a year or two. The ones that are really going to grow big because they're starting from a small base and they have so much room to run. versus something like a Walmart that's going to grow 1% per year because it's, the size of Walmart.
But also, we should talk about the fact that this is the Russell 2000s where volatility lives. So when you're looking at the Russell 2000, you're thinking, well, why don't they talk about that as much as they do the S&P 500 or another index? This is one of those things where you really need to know what you're doing. It is not simply just picking anything in the Russell 2000. You need to know what stocks you're picking and why. You need to know their fundamentals, financials, leadership, and this is where volume, like market cap, really comes into play. But just so you know.
Yeah. The Russell 2000, or like I said, are small caps, and as Brent said, this is where a lot of volatility happens, right? Like anything we know in the world, it's high risk, high reward. You're going to get bigger returns in the Russell because there's smaller companies that have a lot more room to grow versus, again, the Home Depots, the Walmarts, and the S&P 500 that are so big and they grow maybe 1 or 2% per year. So you'll get a lot of bang for your buck in the Russell 2000. But, it's more risk. So just, size your trades accordingly. So what this graph is showing, and I've kind of boxed off the areas I want you to look at, the bottom left and that kind of that middle portion. On the bottom left, what that's showing is that the Santa Claus rally for the Russell 2000, the Russell 200, the return in that last week of the year, going into the first 2 days of next year, is actually 3%. Now remember, for the S&P 500, the return on average was 1.3%. So the Russell 2000 or smaller cap companies, you get a bigger bang for your buck in these smaller companies in that last Santa Claus rally timeframe. And the other point, if you kind of look to the right, the other part I have boxed off, what that's showing is that 32.8%. What that's telling you is that you're getting so remember the market returns on average 10% per year. The Russell probably returns a little bit more. We'll just say 10%. So what that 32.8% is representing is that the Santa Claus rally at 3% that it returns in that last week of the year is actually 32.8% of the total year's returns for the Russell. So essentially in 1 week of the year, the very last week of the year, in 2 days in the next year, you're going to get on average a third of the returns of the entire market in 1 week. That is huge. And it kind of comes back to the thing Brent often talks about is that, if you're out of the market, I think it was like Brent's like on average 10 days a year, you can miss out on the biggest moves in the market. And this is an example of that. This 1 week, over 1 week, the last week of the year, returns on average 30%, 32% of the year's total return of the market. So if you're not in the market that last week of the year, in the small caps, you're gonna miss out on a third of those returns in that short period of time.
And I'm really glad we're talking about this because these are the numbers that justify those small days, right? If you think about March the 23rd, or was it March 23rd when the market started to climb back up, or you think about this, we're talking about 5 days, and it's like at one point in time it's accounting for 32% of the overall move. That's huge. But then that's 10 days. That's not even the total 10 days. So you add in a couple extra days, like when earnings reports come out, or one of the companies reported a potential merger, that 1 day where you get that what just happened movement in the market, 10 of those together easily could account for over 40% of the your investing year. Mm-hmm. And that is the reason that if you miss 10 of the most significant days in the market, it's the equivalent to as being set back 3 years. 10 days of the most significant gains in the market could account for you basically missing 3 years of investing. And the reason that I'm harping on that now is because, it's like, I know you all are thinking this, they keep going back and forth between each other because we really respect the way each other thinks. So in this case, I'm gonna go back to what Leon said. You have to understand how you're allocating your account in time in the market. And for the people who think, oh, I'm going to time the market, this isn't why we're presenting this information today. We aren't presenting this so, some of you investors, and if you're thinking this way, you're probably a trader who is going to say, oh, I'm just going to go in around Christmas time to take advantage of the Santa Claus rally. You're probably not ready for that type of movement in the stock market. I mean that just honestly. If you're watching this and you're thinking, okay, now I'm going to do it, and it's your first time ever having that thought, you shouldn't do it because you don't know the market well enough, because you would have already known about the Santa Claus rally before this live, or if you're listening to the podcast. And I'm just going to just give a quick story. I got a phone call today from a potential investor in Antigua, and they want to invest in the American marketplace. And it was pretty cool because this individual, we had a conversation almost two years ago, and they started the phone call like this: I have to make a confession. And Leon, you know, whenever somebody says that, they did something in the market, right?
That's like when people start with they start with all due respect. You know what's coming after that.
And the person said they had gotten out of DocuSign on May the 14th or 15th. And then they had gotten out of it was another one like Disney or something like that. And now those companies are up over almost 50% from, I mean, between the two, they're probably up like 60, 70%. And he was just like, I'm sorry. He was like, but I want to get back in. I realized what I did wrong. But it goes back to, he missed that rally. For everybody who jumped out of the market and was like, you know, we're bailing, you didn't get the return of when the market came back up. And for this Santa Claus rally, it's not something you just ride. This is information we're providing to let you know that it's happening. But you should also know, come January, sometimes, especially in the retail sector, you start to see a pullback of some of these companies' share price. And that's all normal because, you know, with the Santa Claus rally, the other thing is between Christmas and December the 30th or January 1st, is called what it is, you also see a steep profit take out of the market. And then in January, you continue to see a little bit of profit take, but then you see it spike up because those are the people who are putting money back into the market to, you know, take that duration of the year to invest before they do profit taking again. This goes in line with understanding the behavior of the stock market. When you know the behavior of the stock market, you can weather all these other things. And it's good to have this information, but it shouldn't change how you think you're going to invest. It may change the way you trade, but it shouldn't change the way you invest.
Yeah, we're definitely not showing this to say, oh, become short-term traders and try to time the market. No, not saying that at all. This is strictly to show that this quote unquote Santa Claus rally is a real thing. So if you ever hear people talk about the Santa Claus rally, you now know what it is, and you actually now know that it's tradable. Now I'm using the word tradable. That's fine. Like Brent said, if you're a trader, cool, do your thing. If you're a long-term investor like we are, if you want to throw some money at this the last week of the year, fine. But we're not saying this is like something you want to do long-term. We're just presenting the information showing that the Santa Claus rally is real. You can get a higher return during the last week of the year on average than you can during the whole month. But once that, let that be a small, very, very, as Brent would say, what's the term you use? Not risk capital. What's the other one?
Curious money.
Curious money, right. Let it be curious money. Take maybe a few bucks, tens of dollars, maybe hundreds of dollars, throw it at the Santa Claus rally. Once you make your money or you lose your money, you get out and move on. And and keep it long term. But this is nothing to do about short-term trading or anything like that. We're just showing that the Santa Claus rally is real, and that on average you get a high return with the rally. But once the new year starts and you're into the following year in January, get back to your normal way of trading, or at least use, as Brent said, curious money to get in and out of the Santa Claus rally.
And if you're a member of Investing Education Academy, you may have heard tax attorney Beverly Winstead talking about capturing loss. And that was one of those moments where it was like an epiphany for a lot of people who were members of IEA, because they never even heard the term capturing loss. And, for anybody who's listening and is coming to that time of the year where you're looking for a tax advisor, tax attorney Beverly Winstead is amazing. You can find her on Facebook. But this is that moment, like Leon said, if you want to, he said it very nonchalant, but he was like, whether you take the money out you made or you take the money out before you lose more. But if you're taking your money out because you lost, you should have a strategy to that, right? It should be offsetting your gains. And this just goes back to educating yourself on how investing works, not trading, not guessing, because there are a lot of people out there guessing and trying to, do what they think is right. And you're so close to being right. We just hope you take this information and actually do something great with it.
Definitely. All right, so our IEA takeaways. So the Santa Claus rally is legit. and it presents a real buying opportunity. Point two, the rally on average returns anywhere from 56% to 272% more in just 1 week than the stock market on average monthly returns. So basically what I'm saying there is that like we were saying before, on average, stock market returns 10% per year. You divide that by 12, you get about 0.83% return per month. So the Santa Claus rally, that last week of the year and those 2 days of January, depending on, if you're doing the S&P relative or S&P 500 or you're doing the Russell 200, you're gonna earn 56% to upwards of 272% more than that 0.83%. So again, we're not saying we should day trade this. If you want to use curious money, risk money, have at it. But stick to the long-term investing. That's our only edge in the market. But this is just kind of something fun that you can do at the end of the year responsibly. And now if you have the term Santa Claus rally, you know exactly what it is, and you can actually talk intelligently about it now. And the final one is small caps. Small cap stocks showed the greatest Santa Claus rally. They returned over 200% more than the stock market's average monthly returns. And that's what we showed in that last clip, that last slide. Whereas again, market on average returns 0.83% per month. Small caps returned over 3% per month in that last week of the year during the Santa Claus rally.
Yeah, and let's talk for just a quick second about that, Leon. Because many of you all will not see us again until next Wednesday. We want you all to really give strong consideration to buying children's, investments, be it stock, be it real estate, whatever for Christmas. Let's change the shoes and the little toys that we get. And we're not trying to ruin anybody's Christmas or, make anybody, feel guilty about it. But we have a responsibility to make sure our kids grow up better than us. At least I feel like I have a responsibility to make sure my children grow up better than I did and, more astute. But that goes with, giving them options. And, as much as we live in the society we live in, money gives them options. And so you want to make sure you're providing the right environment for your kids, our kids, to really prosper. And so I hope you all, before we give the stock picks, give some true consideration. And we were asked if, what about getting kids stocks is one of the questions that came in. So if you have questions, please let us know in the comments below and we'll answer the questions. You can buy children stock. You can either get it through what's called an UGMA or UTMA account as Uniform Gift to Minors Act or Uniform Transfer of Minors Act. What that does, that type of account gives you custodial oversight of the account, meaning that it is a taxable event at the end of the year. It's not a qualified account. It's not, tax deferred for any reason. But what it does also do is it means that when the child turns 18, they're owed the account. It's legal. Like they're 18, it's their account. So some parents opt to just open an account and it's for their children. And you can do it. That doesn't require your children's social security card number or anything else. If you have like nieces or cousins that you would like to open an account for, if you wanted to, you can just open an account and earmark it for that person, or you would have to contact a parent. It has to be a blood relative. I want to say is grandparents qualify. In this world, godparents don't. Just know that. So don't walk in thinking you can sign for the children because you can't. And the second question is, do we have an online lesson for children? We are actually working on that right now. And, if people who are watching the replay or watching this live, if you can let us know what type of information you will want for your children, that would be very helpful for us. I see it says investment basics. When we say investment basics, like how basic, like the history of the market, how to open a brokerage account. If you can give us a little bit more of what you're looking for, and then also if you want ongoing kind of counsel for your children, or is it just you want to have a program that they can sit down and watch and that's it? That will be great market research for us because, like I said, we're working towards that right now.
Yeah, that's timely because we are literally in the midst of putting together a kids financial literacy program that's going to focus on a few different areas dealing with investments that we think is going to be really, really cool. I mean, it's something like that. Those questions came in. We've been asked that a whole lot, and that's kind of why we're developing this program now. We're a few months away from bringing it out, but that's definitely in the development. And as Brent said, if you could drop in the comments, just give us a little more information on what you may be looking for. And on the first point Brent was making about the account, concept at the beginning, custodial accounts, you can definitely do that. But as Brent said, my sister, she just opened a regular Robinhood account under her name. But as Brent said, she's earmarking the funds of that account for my nephew. So anything she buys that is going to be for them. Her and her husband are not going to touch it for the next 20 years. And then, they'll then sign it over to my nephews when they're old enough. But doesn't have to necessarily be custodial. It can just be a regular account.
Yeah, and for that, or to that, we definitely want to give a shout out to Kayla from Macbeth Academy.
Definitely.
She is the founder of Macbeth Academy. She and some of her fellow graduates have put together an online course or online school. It has the lower, middle, and upper schools, and they're positioning their private academy to be a feeder to Ivy League schools, and it's all virtual. And she's been using her experience, her knowledge, her intelligence towards helping us put this program together. So for anybody looking, to have a program for their children, or even virtual school in this environment, you should check out Macbeth Academy. And additionally, Investing Education Academy will be providing Macbeth Academy with a financial literacy course for their students.
Yep.
Did I miss anything?
Nah, that about covers our kids portion of the program tonight.
All right, so let me jump into the picks. I'll start with, it's not, you can't see my screen. Let's see. Hold on one sec. My pick today is XPing. It's a ADR, which is an American depository receipt, and it's in the EV marketplace. I know I'm using a lot of those alphabets.
Yes, your screen isn't up.
It is not?
It is not.
Oh, sorry about that. So for those listening to the podcast, my pick is XPing today. It's a Chinese-based company. It's in the EV market space. For anybody who doesn't know, the EV market space is electric vehicles. Electric vehicles I said this last week, I've been saying it forever. And Leon, just correct me if I'm wrong. I just want to make sure I did not pick this last week, did I?
No, you did not, but I will double check.
Yeah, because I gave it strong consideration last week too. So I just wanted to make sure I didn't double up. But if I did, I'll correct it real quick. Did I?
Yeah, I'm looking at it right now.
Okay.
Give me 1 second.
I feel like I might have. So you all know this is real. But why are you looking it up? One way or the other, let me tell you about XPeng. They're in the EV marketplace in China. China has one of the largest populations on Earth. And right now, governments.
Yes, you did.
Okay, well, let me just go through it again. I thought I did. Right. So this is, no, it's cool because I have the second one. But I still want to say, like, this company had a small pullback. And in that pullback, I thought it was a great opportunity to buy more shares, which I did. So I'm talking to you all about it again. But when Leon pulls up his, I'll go back and I have another one I'd like too. But for this one in particular, before I go, these American depository receipts are foreign-based companies that trade in the U.S. marketplace as if they were U.S. stocks. Give this consideration again. I'm loving the EV marketplace because my next one is going to cover just a different segment of the EV marketplace. So, Leon, I'll let you make your pick.
All right. So my pick is Boeing, ticker symbol BA.
Boeing. We got to start talking. I'm like, I feel like.
You feel like you picked that before?
Yeah, I'm like, as time goes on, though. But you know what? As time goes on, we have so many picks of this.
Yeah, Boeing's
so okay, so for anybody that doesn't know, every week since roughly April, May, June, somewhere in that space, we've been picking stocks once a week. If you have been investing with us, and just assuming you got one share of everything we talked about since we started, your portfolio for the year would be over the market norm of 10%. You'd be somewhere in the range of like 28 to 34% rate of return if you're just watching these lives. And that is 3 times what's going on, what you were getting in return from the market. So I'm just saying that to show the benefit of really just kind of being with us on these lives. And we've known people to have had 20, 30% returns in a given month. So yes, take it away, Leon.
Yeah, so no, yeah, we have a big Boeing. So yeah, so okay, Boeing's my pick, and the reason, so we all know, well, maybe we don't. So Boeing is the largest plane manufacturer in the world. They supply most of the planes to all the major airlines, and they have a huge military business too. That's just massive. So Boeing got hit with a double negative around COVID. So of course, COVID being the first thing, shut the whole world down. But it also, some of us may remember the whole 737 MAX issue with those planes that crashed. Sadly, I believe it was end of last year or early this year. 2 planes crashed. There were 737 Maxes, killed sadly everyone on board. And they found out that it was actually a software issue. So, and I believe the 737 Max was Boeing's next big, thing, the next big product. And they had to shelve it. Like they had to shut it down because the plane was found to be defective, and the stock absolutely cratered. So it got hit with the 737 Max issue and COVID. Now, and they discontinued their dividend as well. So Boeing just they've had a terrible last 6 months to a year. But so the reason I picked it is because I've been watching it, and the reason I picked it is because today, so they got approval from the FAA to fly the 737 Max again. It was grounded before, now it's no longer grounded. I believe the first flight, official flight, is going to be in a month or two. And I think it's either Delta or American Airlines going to be the first one to fly commercially again with it. But today they had their first official flight on the 737 Max with non-government officials. In other words, they had reporters, some aviation geeks, and some people that just work for Boeing to fly on this thing to show, hey, it's safe again. We're back in the air. There's no problems. So today was the first official day of the 737 Max getting off the ground again. So 2 issues. 1, 737 Max is back. And 2, we all know the vaccine is around the corner, right? And, excuse me, over Thanksgiving was the largest number of people to fly since COVID. I think it was over a million or 200,000 people flew between those right before Thanksgiving. So air travel is slowly coming back. It's still down, I believe, 60 or 70% versus last year, but it's slowly coming back. So those 2 issues with Boeing. The reason I picked it is because again, it's coming back. But I want one other point. This is how big Boeing is, right? Boeing alone, like Boeing, the company by itself, contributes 1% of the entire United States GDP. United States GDP annually is 21 trillion with a T, trillion dollars. Boeing alone contributes 1% of that, which is $210 billion. And when I say GDP, I mean that GDP just stands for goods and services that are produced, that are put out in the economy, that generate transactions and income and activity in the economy. So Boeing alone is 1% of the U.S. GDP. I mean, Boeing is a massive, massive company. And so that's another reason I picked them, because 1, they're coming back from COVID, they're coming back with the 737 Max coming back, and it's just 1% of GDP. It's one of the biggest companies on the planet. So my pick is Boeing. Ticker symbol is BA.
Yeah, and Leon and I, we did a teaser a while back about some land that we had purchased, and Boeing just did a deal with the country where we purchased the land, and they'll now be reinstituting a direct fly. So that's huge. I mean, it just happened, and since the time we bought the land, which is only 2 weeks, 3 weeks,
about 2 weeks ago.
2 weeks ago, we're at 57% on the value of our purchase. So Boeing, thank you, because if those planes actually make it, it will increase our property value, which is, as a result of that, they're talking about putting another airport into the country further north. But
are we saying where yet, or are we not announcing that yet?
I mean, what do you want to do?
I mean, it's up to you.
Okay, cool. So we have bought land in Senya, which is the west. It's the southwest side of Ghana, and anybody knows Ghana is on the coast. So the land that we purchased is actually about 15 minutes away from the ocean. We're working on, as since the deal has gone through, we have there's been a lot of interest in us working with the individuals that were putting the whole deal together. And now we're working on getting oceanfront property, which is going to be awesome. So, if you're part of Investment Education Academy, we the tagline is investments and other investments. We focus on stock market, real estate, and entrepreneurship. So, I mean, these are everything about that is kind of coming together because of the stock. We use stock money to actually buy the properties. And now the properties have appreciated. The entrepreneurship that is happening in the country has made it to us, and we're going to be a part of that going forward. So you'll be making money on that side too. And one of the things I want to say about Boeing is, when this country looked at getting planes, they went to Boeing. And so they're doing a lot more in sales than I think what a lot of people realize to connect the world. Now, if you look at the pick, for anybody who pulled up Boeing stock for today, which is December the 2nd, 2020, it was up 5% today. That's almost half of the movement of the average stock market movement in a day.
In a year.
In a year. In a year, they did it in a day.
Right.
And it's things like this don't happen inside of your savings account, people. Like that's really what I want to say. It's just it doesn't happen in your savings account. It's not going to happen in your savings account. And even if Boeing goes down tomorrow, if the chart is left to right. It's left bottom, it's moving, it's like middle right. I'll take middle right over a savings account any day. So let me pull up mine. I'm going to go with Grow Nation.
I was going to say real quick, one last point on the Boeing issue and kind of related to Ghana. So as Brent said, yeah, we purchased 1.6 acres of land, semi-beachfront land in Ghana. Totally virgin land, hasn't been developed. So we basically got in a really, really, really good deal on the ground floor. And we presented this opportunity to some of the portfolio Panthers inside IEA as well. But related back to Boeing, so Ghana actually just they're actually reinstituting Ghana Airlines, and it's been gone for however how long, but they're reinstituting it. And as Brent said, they're buying these planes from Boeing. So and the airport is one of the airports actually be within half an hour, 20 minutes of the land where we just purchased. So Boeing kind of ties into what we kind of announced here. But Boeing is, again, it's 1% of US GDP. I mean, it's just a massive, massive company.
Yeah, and as a result of Boeing and just was the everything happening in Ghana right now, they're talking about building an additional airport now, which it'll be like a hopper airport where it will go from the main hub to like a very small local airport, like private jets, and it would be in the northern part of Ghana. But if they didn't have more people coming and their own planes and such, this wouldn't the other airport wouldn't happen. So it's kind of a domino effect that adds to their whole country's economic rise, and it adds to the Boeing's bottom line. But it'll be, I mean, this probably will be like an employee salary at Boeing. So for them, it's not going to move the needle, but it does continue to position them as the leading provider of aircraft equipment. So let me say, all right.
Who'd you pick now?
Grow Generation.
Okay.
And this is a medicinal marijuana company. They've been growing by gangbusters. But right now, with the Democratic win for Biden and Harris, they're going to be grow friendly. Like, this is one of the things that a lot of growers were watching very closely. And if you look at the chart, and for anybody who's watching this, the ticker symbol, or you're listening to the podcast, the ticker symbol for Grow Generation is GRWG. Again, that's GRWG. It's trading at $35.43 a share. It's up $2. And what I like to point out is if you saw Boeing, they were up $10 a share, which equated to about 5% move. Grow Nation is one of those smaller, more volatile companies, but just being up $2 is the equivalent to 6% for them. So sometimes we get caught up in the dollar moves and we're like, oh, yeah, my stock had a $10 move. It had a $10 move. But that $10 move for some stocks is less than 1% movement. Is 1%. So this company had a $2 day, where it rose $2.08 per share today. That's $6. I mean, 6.24%. You're not getting that in the savings account if you're in the savings account for like your life at this point.
This is right.
At least 10 years. You have to be in the savings account at least 10 years to get that type of return that happened in a day. Again, it might be down tomorrow, but overall it's moving bottom left, upper right. So
bye.
That is my choice for today. You can look up Grow Generation. With the new administration, I really think they're going to do well. They just broke that they're getting closer, I should say, to that $2 billion market cap. So it's pushing them out of the purely small cap space into mid caps. So, pay attention to them. It's going to be interesting to kind of see what their rise to greatness might be. I'm going to take a ride with them and see how it plays out. But specifically for this, I would say in general, the marijuana stocks have been crushed. And, for anybody who's looking at this as, okay, I'm just going to swing for the fences and hopefully it'll work, I would not do that here. This is where I would do an allocation. I would go back to Leon's strategy. It wouldn't be more than 6% of my portfolio. It might be even a little less. And I would only use risk capital. If it's money that you need for any reason, I would not put it here. However, the money that you do put here, you can see significant growth, especially once we see what the administration does as it relates to medicinal marijuana, across all states in the next 12 months.
Yep. And I just last point on this is kind of what Brent was saying about the percentage and the absolute dollar amount. I would encourage everyone to just totally forget about the dollar amount and only look at the percentage. Because as Brent said, $2 here is 6%. But on Boeing it was like $10. But if you take $10 and put it in Amazon, it's like less than 1%. So the dollar amount doesn't essentially really matter. It's all about the percentage move. So I just want to make that point. Yeah, I used to get caught up big time in the dollar amount. Then I learned over time, okay, it doesn't really matter if a certain dollar amount is less than 1% or if it's more than 5%. That's what I want to know. What is the percentage move versus the dollar amount move?
Yep. So with that being said, anybody who has questions, you can feel free to contact us. If you're interested in joining IEA, you can go to www.ieamembers.com and join. If you're looking for us on Facebook, you can go to Investing Education Academy and just search this will pop up. And this week we have an Ask an Expert. And this is a good one for anybody who just isn't very familiar with the stock market. We have a psychotherapist who will be joining us as an expert, and we'll be talking about regression to the mean and also stress management when looking at your portfolio. So that's going to be a very good one because stress is one of the top causes why people don't follow a strategy and they bail out of the market while it's going down versus waiting for it to come back up. So it's going to be a really good one.
Cool.
All right. Thanks for being with us. And we will see you all next Wednesday. For everybody in our group, if you're in Investing Education Academy, we will be doing our Ask an Expert this Saturday at 6 p.m. Come ready with all your questions. This is your time to ask an expert. So we see you all soon.